what's the key metric to watch? We had our own Houston earlier today. He was really focused on deposits. How big of a deal are deposits? Obviously, their core business, but as a metric to watch in today's reports.
Yeah. Hey, good morning, Frank. So, yeah, I think it's two things. It's deposits, the movement of deposits, what companies are paying on their deposits, and then it's credit, right? The outlook for the economy and what banks are seeing in their credit books. On the deposit side, the big banks, as we've seen in all the data, aren't going to have much of an issue there. So I think it's less of a focus, but people will be tuned in on what they're paying on deposits and what their net interest margin expectations are. And then, credit is, are we going into a recession? And if we are, kind of what areas of credit are starting to show some cracks? We're not seeing that much yet, but obviously people are talking about commercial real estate. So that's an area people are focused on, auto as well. So there are some points of focus, but those are a couple of the biggest ones right now.
All right, so obviously these stocks do trade in the pre-market. So, Stephen, I want to come to you. Are there any tea leaves out there that investors can read or any signs of the direction that deposits are actually going in? We actually just got some data out from Bank of America this morning. According to their data, it shows $500 billion in outflows from commercial banks have happened over the past 5 weeks. Anything else that people can look for?
Yeah, I mean, you've seen some of the data, the H8 data so far that as Devin kind of intimated, has showed some flows into the larger banks, overall net flows out of the space as a whole. I think what you have seen, though, in that data over the last 2 weeks is some stabilization. So I think that's what we'll be looking for today, is just to confirm, not only the data for 1Q earnings through quarter end, but also to the degree companies give us data through today or what have you to show what has happened subsequent to quarter end, and have we seen that stabilization? And if we've seen stabilization on the deposit side, much like I think we've already seen on the borrowing side, as we've seen from some of the Fed data, then investors can get a lot more comfort around at least the earnings power of these banks. And then it becomes a question of, how hard a landing or, do we get later in the year, and what sort of credit issues may or may not materialize in force.
So, Stephen, I'm going to stay with you for a minute. You mentioned credit. What about credit are you looking at? Is it the availability of credit, the liquidity right now? Is there some other metric that maybe our audience might not be aware of? Because banking, just to be honest, is a bit esoteric.
Sure. Yeah, I mean, look, I think first and foremost, if we see growth from banks this quarter, larger growth, or even growth in line with last quarter, I think that may be viewed negatively by investors. I think people are very wary of growth because of what we may see later this year around credit. In terms of metrics, I mean, look, we're not seeing net charge-offs, and I don't think we will this quarter. We could start to see an increase in TDRs, some early stage delinquency type numbers that we could track. What we expect this quarter is you could actually see some loan loss reserve build. You could see, due to CECL, some of these banks kind of front run expected losses as they have to from that accounting feature. And quite frankly, that's what we saw in September 2020. That became kind of the ramp point for the group, because we realized we had sufficient reserves to deal with the impending credit issues, and then investors got more bullish again. So I think you look at those early stage delinquency numbers, you look at the reserve build, and then, hopefully we go from there through some increased confidence.
All right, certainly something to watch. Devin, over to you. These banks, several of them also have a pretty robust investment banking business. What are you expecting from that, especially with a very muted IPO and M&A market?
Yeah, so the large banks that we look at, Goldman Sachs, Morgan Stanley, you're going to see weak equity capital markets, and then weak M&A as well. So M&A completions were down 50% year over year. So you'll see that. But the flip side, which is actually maybe a bigger driver, is trading pretty resilient. And so we actually want to lean into some of the names here on a relative basis that have more exposure to trading pound for pound. So Goldman Sachs is one good example. 45% of the firm-wide revenues come from trading. And so we think their results are going to be more resilient into a world of a lot of unknowns around credit, deposits, where those just aren't bigger stories for firms like Goldman. And so that would be one that we would look at here amidst a lot of volatility in the space.
All right, so Devin and Stephen, one last question for each one of you. Stephen, I'm going to start with you. Obviously, these banks are going to have calls. Their CEO is going to provide guidance and other commentary. Which one of these calls do you think investors should listen to or at least read later on today?
Yeah, I mean, I think the JP Morgan call and whatever Jamie Dimon says becomes, probably the most talked about conversation of the day. And whatever he says, I think will have some carryover throughout the day and even beyond into regional bank earnings. So I think the read through from these larger banks to the rest of the group is probably less significant today than it normally is. But his commentary and their commentary as a whole, I think drives the boat to some degree on today's market response.
Devin?
Yeah, I couldn't agree more. I think JP Morgan's critical, but I think to Stephen's point as well, that, there's kind of two different stories going on between the large banks and some of the smaller banks. And so people are going to continue to focus on some of the smaller banks and where there's been some volatility over the past month. And so I think we need to see stabilization at those banks as well for the whole space to really to bottom out here. So today will be important, but there's still a lot of wood to chop here as we get through earnings over the next couple of weeks.